in today's video, we're going to talk about trend bars and doji bars. So with the help of these two single bars, it's going to drastically change how our decision is going to take on critical times in the chart or trading sessions. So let's take a look at the secrets behind the doji bars and trend bars and the psychology behind the formation of such candles and how to take trading decisions based on these simple patterns. So basically in market there are two things that can happen. Either the market can be in a sideways day or the market can be a trending day. So if you can identify these two places in the market or these two phases of the market, you can be on the safer edge in the market. So with the help of doji candles and trend bar candles, we'll be able to find out whether the market is in a sideways or is it gonna be a trending day. So initially, now that you have learned that the markets can either be trending in this chart of you. Now the next thing is to find out is what is the current market telling you about. So if you take a look at how doji candles are going to help you, basically before I go into doji candle, let me tell you what a doji candle is. A doji candle is a candle where the body is very small and there can be lower wicks and upper wicks. So if you take a look at a doji candle example over here, here is a pure example of a doji candle. Here the wicks is long, yeah, the lower wicks is long, the body is very small. So what does this indicate? This indicate that the buyers try to come in and bulls try to come in at the same equal force. And also it can mean that the market is a critical situation, is at a critical situation. So because of which the market is unable to find out whether the market is going to go down or is going to go back up. So in this situation over here, we can find out that the market is right now trading in a at this point of the time, the market, we can see that the market is trading at a really good support zone in 1 hour. Here the market went up, the market went up, here the market went up again, and again market came over, it had a back gap up and the market went up. So this is a key level in market. So we have to, when the market came down, we can see that there was a bullish pin bar forming with a long wick, which is trying to indicate that the market is at a good level and this support is respected. Next, we have a doji candle. So with the downtrend over here, we have a strong down trend over here. With this downtrend, when the when the bulls kind of tried to test this place again, and at the same place when the bearish people came over here, here the market kind of like came at an equal force, because of which it's unable to find out, or it doesn't know the fact that who's gonna win next. Because now the doji candle is formed, the next important candle we have to find. If it is a bearish candle, the trend is gonna be in the bearish side. But if next candle is gonna be a green candle, then you have to be careful whether you have to go short. Because if a green candle comes of a doji candle, it means that the buyers are strong at that point. So with that in mind, let's take a look at what the book says about doji candle. So doji means the body appears to be tiny, neither the bulls nor bears are in control of the market. So here is an example of so many dojis that the author says. Here doji. So basically this book is saying that it's simpler to consider it's simpler to consider the charts in terms of trend bars. Trend bars meaning these are the trend bars with long bullish or bearish candle, and doji bars. So here we have multiple doji bars. These are considered to be examples of doji bars. This is a doji bar, another doji bar, a doji bar, again a doji candle, doji candle, doji candle. It simply means buyers and sellers are in same control or in equal power. If you can understand this simple fact, you will be able to make better decisions while trying to do intraday trading or swing trading. So now let's take a look at here. If the body is large and the bar is large and the body is small, there was no much trading set. So if a doji candle is also considered to be a very poor in strength. It has no strength because otherwise the low and the open and the close would be in a bigger range, right? So here let's say here is the open and here is the close. So this is considered to be a strong bullish candle, right? Here is considered to be a strong bullish candle. And if let's say the open is here and close is here, it's going to be a strong bearish candle. So if a doji candle is formed, it means that the close is equal to open. So in this case, both are in equal and opposite reaction of buyers and sellers. So it's kind of evident that that's the psychology behind that candle formation. So now next important thing to know is Larger bodies in general indicate more strength. So here you can see that these here you can see there are large red candles over here at this resistance. We have important resistance over here. With this important resistance, here we have important resistance. Here also we have a normal candle, normal bearish candle, again a normal bearish candle, a bearish candle. These are strong bearish candle and they should be moderate in size. In order to be a trend effective manner, the bars that is forming over here should be moderate above average size. So if in case there is an extremely large body, then that represents that the trend is about to fade away. So let's take a look at an example of that. So if you go and define 15 minutes time frame, I'll show an example over here. So when there's an extremely large candle, then you have to be careful. It can mean that the market is going to reverse or the trend is fading away. So in this example, we see that the market was really bullish. So all the people are trying to come in, a small pullback came and immediately a huge bullish candle came. So what the retail traders will think, okay, the market is going up and out of FOMO, many buyers will try to come in. But the institutional players are smart. They see that a lot of people are going to come here, and once they see the market is going to go down, the fear will come in, and people start squaring off their position, which can again increase the force of the market to come down. So, with that in mind, the book says if these are normal bullish candle. Here you can see a really good bullish candle again, Doji. So Doji is here. Then again the bullish candle came up. So after a strong trend, if there's such a big bullish candle, never go long over here. It can mean the trend is going down, or it can mean that it's a reversal. So here bearish candle came again, strong bearish candle came, and the market again fell down, taking away the stop loss of all the people who went long over here in this pullback. Okay, now um, next, let's take a look at. Okay, so if there is series of trend bars, then the best part to enter is on the pullback. So when you have a strong trending day like this, when you have a trending day, if you take a look at the bearish day, so here you have a strong downtrend over here. Here it came up, again came down, came up, came down again, came down, came up. So when you go on these pullback, these are good ways to make a good trade. So you can go in the direction of the trend. Now if you take a look at the bullish market, here you can see a strong bullish market that just in 15 minutes we saw. Here the market went up, came down, went up, came down. So on these pullbacks, it is good to enter. So always try to enter on these pullbacks and always keep your trend your friend. Because another reason to take this as a trending day is because, or to go long on such good setups is because, if you take a look at the previous trading sessions, you can see the market is in a trending mode. So if you see that the market is in a trending mode, here also the market is in a trending mode, so why not you always go for a long push? Because you have to take trades in the direction of the market. That's when your probability of winning a trade is higher. So if you can see that the market was ranging over here, then a breakout came, and now the market is going in upper direction, and you can see that there's a pullbacks over here. And once you can get on the pullback, once you reach the pullback and get a good trading session, that means you are good to go for a good uptrending day. Here you can capture a good move. So always make sure you have a good understanding what happened prior and what is happening right now. So here next, in our book over here next, it says that ideal trend bar is about average size. So like how I told you that if there is an extremely large candle, then you have to be careful because profit booking can happen, anything can happen, reversal can happen, or it is just a fake breakout. But if there's a moderate bullish candles, you have to always look for taking trade in that direction, whether be it bearish or whether be it bullish. A bulls can demonstrate stronger control if the body is about medium size. So it's very simple to understand. If the body is having above average, whether it's bearish or bullish, it means that the bulls are in control. If it is a bullish candle, the bearish is in control. If it is a bearish candle, but every bar is either a trend bar or doji bar. If you want to make it in simpler terms, always consider every candle to be either a trend bar or a doji bar. If the body is small, consider doji, consider the indecision, consider it as a place where a decision has to be made, or there is no indecision by the market where it's gonna go up or go down. So if you can trade market in very simple terms, it is much more easier to sustain and much more easier to remove all the noises, and you can make a better trading decision. But here the author says if a series of dojis mean that can mean the trend is still in effect. So if you take a look at example over here, okay, let's take a look at an example over here. So right now the market hit the resistance and it is trying to come down. Again the market went up, the level was respected and came down. And at this point you can see that the market is trying to make a lot of doji candles. So in this place we can see there are a lot of doji candles being formed, which means it's neither bulls nor the bears are winning. So here let the breakdown happen or breakout happen. Here since it is in a resistance mode and it's trying to come down, make sure you go for trades that are in direction of the trend. So now that your direction of the bearish is much more, the bulls are weak and the bears are stronger. So the market to go down is much more higher probability, right? So here you can see there are a lot of doji candles being formed, doji candle, and once a breakout happens, simple again a strong resistance. This support zone became resistance, and it clear breakout came, and here a confirmation also came. Keeping a stop loss here, you can actually ride the trend to the next support zone. And exactly in this support zone, we have another doji candle. So now that this is a good level to go along, because after market came here, it went up. So you have to be careful next time the market comes. You have to be sure, like, okay, let's look for a sign. Here, a strong wick is there. Again, a doji candle is there. A bullish candle form. Again, another doji candle is there. That which means that even the sellers try to put the market down, the bulls are winning, and the market went up. You can keep your entry over here, keep your stop loss here. You can actually ride the market to 1:2 range. So that's how simple you can use doji candles at key levels like pullbacks or at resistance or at support. If you can make a look at the doji candle and the next candle that is being formed, which gives you confirmation, then you are easy to go take the trade in the direction of the trend. So next, if we can take a look at, so the authors say the purpose of us to take use of simpler doji and trend bar is just to identify who is in control. Because if you see doji candle, it means that nobody's in control. But if you see a good bearish candle or a bullish candle, it means that market is in control of someone else. So if you try to find out who is in control, then you can make a good trading decision to make a good risk reward trade. So individual doji means that neither bulls or nor bears in control, and trending doji means indicated trend. So that means trending bars can indicate the trend is going to continue. And also, if you can take a look at other example, also we can see that. See, here also the market is trending up, and here doji candle is formed again. Doji candle compared to the body, the size of the body is small. Again, the market went up, keeping a stop loss, just stop loss because markets are going up. You always have to keep a buffer space so that you can capture good amount, or so that your SL is not hit. So, keeping your stop loss below the candle and going up long over here, you can see that gave a really good bullish candle. Again, the pullback came after a trend. A pullback came again, made a small candle, bullish candle. So it's still in intact. So you can see that the market is still in a trending mode. So always we make sure if there is a continuous doji candle is being formed, that means the trend is still in intact. If a doji is being formed at a resistance or at a support, then make sure in what direction the market is going to go next. If it is forming a bullish candle, the market is going up. If it's forming a bearish candle, it is going to go down. Okay. So sometimes why we say that we need to keep market in a why we need to take a look at the trend and keep it as a friend is because here you can see the market was trending down. Here the market is trending down. Again the bear spawn. Again the market came down, went up, and here there are number of doji candles being formed. So now that a breakout came, so if you see in a smaller time frame, this can look like a breakout. So what many people will do, all the retail traders will try to go up keeping their stop loss over here. But institutional players are, they want their stop loss to be, so that's how they make money, right? So they want the stop loss to be here. So make sure you see the prior trend. You see the prior trend is bearish. If a breakout happened, wait for retest. Even after retest, did it make any bullish candle over here? No, it made a small bullish candle. It's still did not. It's still close. It's still near the breakout area, but it still not make a good bullish candle, because bullish candle has to be at least this side. If this same candle was formed again over here, then we can expect the market to go up, but it was a small candle, the strength is relatively less, and the next bearish candle formed was very good bearish candle. Here we can see that the market is still going for down. That's why the strength of this candle is very high. We can simply see the body is so long, and the open and high is so wide apart that it can show that the bears are still strong, the bulls are so weak. So with this in mind, again, even if you missed out this trade, wait for the retest. Here retest happened again, the price tested that place again, and bearish candle formed, and here also doji candle considers a bearish pin bar, and the market came down again. So that's how simple and patiently you have to wait for the market to come at your place and give you a correct decision, or to understand the psychology behind such channel formation can give a greater edge in the market and a higher probability to take the trade based on the trend. So that's it, guys. I guess the next topic that I'll be teaching is bar candles, and this I'll be taking another video. So if you guys want to learn more about such candle patterns and psychology behind the formation of such candles, make sure to subscribe, and so that you not miss any videos. And do leave a comment and give a like so that you keep supporting me, and give feedbacks on how I can present more, present better, so that I can share my knowledge about the market to you. And we'll see in the next video, guys. Thank you.